Hey guys, good evening. This is Simon with Trade and Perform Coaching. Uh, Wanted to go over what was really a very interesting day, very spectacular day um, in this quick video. So to start with, number one, wanted to show you we opened pretty significantly in the hole, right? You can see that we closed here right about 2079. We opened up at 2065. So that's already roughly well, let's see, that's 2080 to 65 is 15 points. We were 14 to 16 out of the gate. I'm not great with math, but that was roughly the number off the open, right? So the first thing that's going to kick in is shorting in the hole. I have a general philosophy, and there's two philosophies that keep me consistently profitable. The first one is trying to avoid taking a trade in the market in the first 30 minutes. Why? I can't tell if we're going to drive straight down or straight up. It's where the both in my own trading and in the people I've coached over the years, it's where the greatest amount of losses have racked up. The easiest, the easiest thing for me to do in that process is to simply sidestep taking any trades in that period of time, and it also allows me to observe the price action. Very, very important. So I can tell whether not only what direction we headed in, but on the counter rotations, how big are they? I get a real feeling for the market in the morning without the pressure of having to manage a trade or the need to get anything out of the market at that point. So what these lines denote, you'll notice on this chart, I have a proprietary swing indicator that I share with the members in the room when the signals are generated. And so what these lines denote here are where swing shorts and swing longs were generated. Now, what everyone needs to understand so that this video makes sense is that there are 4 points of entry. I'm going to draw those for everybody so that everyone understands what I'm looking at. So those 4 points of entry work like this. Let's say the market's moving down as it did here. It can move down, and then it has to have some type of swing back up, right? It can be small like it was right here, and that generates a swing long. That's entry number one. The 50-60 retrace on that, meaning the 50% retrace from the swing low to whatever that high was, that's entry number two, right? And depending on the volatility, there can be a wide amount of distance, small amount of distance, or they can sometimes be almost equal, right? Entry number three is if there's a support resistance zone. Let's say there's a support resistance zone down here, and it's a virgin area, meaning it has not been traded during the day time frame trading session, meaning anything after New York open to New York close. If it has not been traded, that is entry number three. That is a high odds entry. Entry 1 and 2 are the highest risk entry. Entry 3 is a high odds entry. And then if it hooks back around and traps back in, whether or not it hit entry number 3, that is entry number 4. And entry number 4 is my highest odds trade. Okay, so then now everyone's clear on that. And if you want to see what it looks like on the other side, you just flip it upside down. You come in, you turn, backside test. So that's entry 1, 2, 3, and then 4 traps back in to hopefully shoot it back the other way. That's what it looks like when you flip it around. Let's close this up. And then let's just take a quick look at how the trades I actually had my biggest, since I've had the room for the last 2 years, this was the single biggest trade I had to the long side. We were able to get one 20-point scale out of the trade. So let's go through this really quickly here this morning. We open up. Swing long triggers after 9 a.m. But you'll notice this morning, due to the gap down, due to the heavy sell pressure, I was focused on entry number 4. And I can show you how I communicated that out. Let me get that for you. Well, apparently I didn't tweet that one out, so I'm not going to. I didn't tweet that I had marked it off, obviously, in the room in real time. I didn't put it out on Twitter, but here's the important part. Originally, the trap would have been up here, so it would have looked like this. This would have been the original trap point. You notice that a trap number 4 never set, and so we keep adjusting the point of entry down until we finally get a trap point. So this would be the new trap point, and you can see we pushed down very hard. We did not get to a zone. That zone was actually the gap. This area denotes an unauctioned area. I'm not going to go through the details of that right now, but these two bars created a new swing low. The break of that swing low and then you'll see this arrow right here. This denotes when we trapped back into that range, and that triggered our swing low, our swing long, excuse me. And you can see it now shows that it was tweeted almost 12 hours ago, but you can see long half size triggered 2052.25. Stop should be 1 point below swing low. Alternate location for entry is at 2050, and that's if you had a bit more patience than I was able to display, and you were able to wait. That 2050 is simply a 50-60 retrace from this swing low to this swing high. That's how we came up with that 2050 entry. I entered at 2052.25. That was my long. My stop was 1 point below the swing low, and you can see for the day that obviously we just continued to run all the way up. We closed all the way up at 2084 3/4. Of course, when I entered at 2052, I'm not delusional. I don't think most of my trades are going to run for 30 points. So the way I handled that is, and you can see here that in addition to buying the binary calls as well, the 2069s that I did very, very well, you can see here you say you should have 3 scales from 2050. So the point of this was for those who took 2050, you scale one. And anytime I take a trade, you're scaling the first 50% of the position and the first 3 to 4 points, right? So you can see if you took it from 2050, you almost immediately had 3 points, right? You took it from here. By the time you even got back to 2053, you already got your 3 points. You should have had almost half off. Certainly by 0.4, you should have had it off. And then you can see in my particular case that I was able to get 2055, the 2055.25, excuse me, 2053.25, 2052.25. Wow, I'm tired. Excuse me. I'll go back through and do that again. I was long from 2052.25, 2053.25, 2054.25, 2055.25, and finally 2056.25. I was able to get 4 points off. And at this point in the decision-making process, I have a very simple choice. I can either move my stop to net break even, or which would have obviously from entering here would have put me down somewhere near the 2049 level, or I could have entered it at true break even. In this particular case, we were over 30 points in the hole at this point, and it's very, very rare that the market can build enough momentum to push to the downside. So obviously net break even was the appropriate choice there. And as the market went up, I actually ended up having to leave for lunch. I just left my stop as is, and it was just a special day. When you get a 20-point scale, this is where I came up, and what the objective was trying to hold the trade until I got another swing short printed, which explains why I came out of the trade up here at 2072. This is where I got my next swing short indication. I'm going to talk more about that in just a second. It's very important to remember when you're down in the hole like this that you have to force yourself to think. If people were talking about death crosses, the market going to zero, there was a lot of fear in the environment, you have to mentally force yourself via your preparation in your spreadsheets and in your visualization that that's an opportunity. That anytime the market's down that much, that you have a huge odds of it not closing down at the low. You can't let fear consume you. You have to take command of the situation, look for your appropriate entry, and push those trades when you get these opportunities. They're very, very, very valuable. And that's exactly what we did in the RIM. Now, I want to point something else here. This is where the swing short generated. See this arrow right here? This arrow, we entered that swing short at 2072.25 to the short side. I'm going to show you where we posted that in real time. Let's see here. Okay, right. Okay, so I want to point out a couple things. I entered short at 2072, but I want to point out something. You'll notice that when I took this short at 2072, we never actually got a trap. In order to get the trap, I actually would have had to trade above 2074 and trap back down. NQ, which I'm not going to pull up right now, also triggered a short trade, and it did trap. So ES has been was weaker than NQ today. So when NQ trapped, I took my signal and took NQ short at 2072. And again, you can see that we followed our discipline right down the line. I warned everyone it was not an entry number 4. It was aggressive, right? And then, and actually, this was a misprint. It should have been scale was 2071, then 2070, and then 2069. Wow, I was tired when I was doing this. 2069, and then finally we had one more scale. We got 4 points off of that. So 2068, there we go. 2069 and 2068 were done for +3 and +4 points. Again, you'll forgive me for not being too polished here. I'm not a professional marketer. I'm a professional trader. Really big difference. Obviously, I can make this much more polished. The point of this is we were able to grab 20 points on the long side, right, after we got the swing trade. And why is the reason that this worked? It actually wasn't so much, it was multiple components, right? But catching this long from here to here, there was a very important reason why we were able to capture that. Number one, we weren't looking for shorts deep in the hole. We weren't getting run over to the long side because we weren't trying to capture that super trade off the open. Number three, we had a trade plan and we executed that trade plan, right? And that allowed me to take this trade up here, which was less than ideal. It obviously paid 4 points, but it was still less than ideal. And I took one more trade. This arrow is actually indicative. I took one last trade up here. When we traded above this trap point, then back below, and the market was just too strong at the end of the day. I took this trade on quarter size, and I'll show you, right? Taking a short 2078.75 quarter size, speculative short. Last 40 minutes, very tough. So make sure it's appropriate for you. If I get a stop, it'll have almost no impact on my day. This is not the first trade of the day you should be taking. The best trades have happened, right? So I do sometimes take speculative trades. This was one of them. I had a stop. I think it was a 3-point stop on a quarter size, quarter of my normal size on a monster day. I also nailed the options really nicely. It was just a really great day all the way around. But I want to emphasize, there wasn't anything magic about what happened. I had no control over how much the market was going to go up or whether I was going to get stopped or not stopped. What I did have control over was following my trade plan, not shorting in the hole, being patient, waiting for the setup, and then, okay, so I talk about the 3 C's, which are clarity. I know exactly what my setup is. Commitment. I will take my trade when it sets up. And then finally, clarity, commitment, and composure. There we go. The composure part, very important. I never lost my cool. I accepted the risk of the trade, and I was rewarded for doing that. So if you would like to be in a room where we take high odds trades, we follow a trade plan, and we stay consistent day in and day out, I would love for y'all to join us. Anyone who would like a 1-week free trial subscription, please email me at tradeandperform@gmail.com, or you can send me a message on Twitter or StockTwits, and I will be more than happy to hook y'all up. This was supposed to be short. It went longer than I wanted it to, but it was a really great day and a lot of good lessons to be learned. Have a good night, guys. We'll talk to you. We'll talk to you tomorrow morning.